Every Friday, tune into Texas Ticket on Conroe's 104.5 and 106.1 FM with Armando Nino of Gull Lake Conroe, focusing on Montgomery County area events and places. Get a feel of the Texas spirit at the event, paired with guest and vendor interviews, event coverage, and ticket giveaways, and so much more. Join us Fridays and punch your Texas Ticket. For more information on the show, visit irlonestar.com/Texas Ticket.
Thank you for listening to Lone Star Community Radio. This program was broadcasted and recorded live from the LSCR studios in downtown Conroe, Texas. Lone Star Community Radio is supported by listeners like you. Donate and sponsor today. For more information on getting involved with Lone Star Community Radio, contact us at lscrstudios@gmail.com or visit us online at www.irlonestar.com.
Good afternoon, everybody, and thank you so much for joining us on the Cindy Cochran Show. We've got a great show for you today, but only because we have a sponsor named Chris Wootton, and he's the CEO of Wootton Financial Group, and they are amazing. I think they are. I think they are because I would never try and have you call somebody like Chris Wootton about your money because that's so important to you, unless I thought that they were good. They've been around 21 years, and that's got to say something. And in the same place, so they're not moving around to different places because you can't find them. No, he's very credible. And I just wanted to say you can go to Wootton. What was the .com?
Cindy. For those who are listening and watching, WoottonFinancial.com is the website. We put a link below the video on YouTube and Facebook if you want a direct connection to Wootton Financial, the proud sponsor of what's the show called? Is it
The Cindy Cochran Show?
Okay. I forgot what the show's called.
I know. I love Chris and I love them, but sometimes I forget. The pressure of being live on TV, on the radio, and then just streaming to all these different places that we stream to. But if you'd like to donate, that's a big deal to us. If you like to be a sponsor, or you like just to donate to the show, because we want to. Now this is how whenever I was on Channel 8, we would talk about different shows, and you want people to come become a member or donate, is so that we can keep the show on the air. And Richard doesn't have to kick me out because, sorry, you need a sponsor. And is that okay, Richard? Have I said enough? Said too much?
Yeah, there's even a donation link.
There's even
in the description below.
There's
to
even
support the Cindy Cochran. Yeah, can you believe that? Did you know that, Cindy?
Yeah, yes, I think I knew it at one time, and maybe I just forgot it. But I look, Richard's always got everybody covered. And so we are always, and we're on so many different platforms. It's so amazing that you just can't miss the Cindy Cochran Show. But if you want to go to Lone Star Community Radio, Facebook, and you watch it live like you're doing right now, if you have done that. But if you haven't and you're just hearing this, as soon as you get home, you can go to your computer and go to Lone Star Community Radio. And there we are live. And today, drum roll, please. Okay. All right, anyway, we have, thank you, Richard. You have to play, you just have to wear so many hats, Richard. You have to just do everything. All right, it's enough.
When someone asks nicely, I feel inclined to do it.
Okay.
You could say please.
You did great. Okay. Shut up, Richard. Anyway, so today, I told you sometimes nepotism is alive and well on this show. But I have someone to back it up with that has the talent, the intelligence, and the background and all the awards to say I can talk about this because this is true. And all she would do is tell you the truth, because if she didn't, then I disown her as a sister. No, she can do that to me all the time. Listen, Carolyn Stephenson is with us today, and Carolyn is my sister. She's my older sister. She's my shorter sister, and just because she's shorter doesn't mean that I'm the oldest one. That's what got me. Everybody always thought I was the oldest, but you're older than I am. Yay! But that's good. That's the kids can't believe it though. They say, "No, Grandma, you've got to be older than her." No, they do not believe that you are your age.
Well, that's good.
Are you going to say your age?
Let's see. I just finished my 63rd tax season. Does that give you any clue?
So what?
63 years of doing working with the IRS and trying to save people from their government.
Save them from the government.
I'm trying to save them from the government taking away all their money.
That's more important right now than any other time. Is right now.
Every client says, "I know better what to do with my money than the IRS knows what to do with my money." There's a truism there.
Well,
so I'm assuming this community radio is all about telling the truth, right?
Exactly.
And nobody's telling the truth anymore, and so
No.
it's hard to discern.
No, who's
very
that guy?
rare.
Who's the guy that was going out with the lantern trying to find someone to tell this is telling the truth, or trying to look for
Archimedes?
looking for the truth?
I think it was Archimedes, or there was somebody. I don't know why I should. It doesn't have anything to do with IRS or taxes.
She doesn't know.
No information.
Yeah.
No valid information.
Yeah, she is
You
totally
can look it up on your
focused.
phone. Every time people say things now, they look it up on their phone to see what the answer is.
Well,
And that's what I love about the IRS website, because they just give you 1 million words per page, and it's like, good luck figuring this out.
yeah, they intimidate you into not.
Well, that's
not
what
to
I was so
look at
amazed
it.
about the DMV here. They made it so simple.
How?
Like how? Because I told you, did I tell you that story about how I lost my wallet?
No.
I haven't lost my wallet in like 20 years, and I lost it being an idiot at a gas station and just put it on the car and drove off, right? And I was all worried about replacing going to the DMV, all this stuff. And I went to the website, and you make an appointment, and you just fill out. It goes, make an appointment here, click here, and you do all this. Like, now print this piece of paper and fill it out and bring it. Okay, that's all I had to do. And I just showed up on the date they told me. They texted me, hey, your appointment's in 30 minutes.
Was there a long line?
But there wasn't a line. I just walked in, and I go, hey, I'm here to check in. Checked in. They're like, oh, we'll see you when your appointment time.
Good grief.
And it was just like the easiest thing I've ever done.
Wow.
Man,
I
that's
didn't waste any time.
the DMV and me. That's what I should do. Write a book. The DMV and me. Every time I'd go, it was the longest line I'd ever seen in my whole life. And you feel like, man, I can't wait to see this movie because I'm going to stand in line forever. And that's what it was like. The line was so long. And these people were standing there, and it started raining, and they all put up their umbrellas. I forgot to bring the umbrella.
Oh, can I ask a question for your guest? Because she's a CPA.
Okay, go ahead.
Well, she mentioned it was your 63rd?
I've been doing taxes for 63 years.
63 years. So
My 63rd tax.
before the computer, when you would file your taxes with the government, I guess you had to mail it.
You manually filled out a form and mailed
mailed
it
it.
in.
And
Yes.
I imagine for those big companies that you worked for, because you're so popular with everybody, all walks of life, like people's taxes is very simple. But I imagine like ConocoPhillips, and they'd have to hire a truck to get all
right
paperwork.
Well, some big companies, they work on their income tax return all year
Year-round,
long.
yeah.
And heaven help them when they get audited, because big companies like a Trump, or like, when you hear all this stuff about the taxes and that Trump paid $750 tax, and he said, but I did it all legally. They're really, during a certain period of time, there has been this incredible benefit that's available to everybody, that's gotten everybody invested in real estate and different aspects of real
Yeah.
estate, because he was real estate, and he made, or whoever was part of developing the law that gave you an incredible deduction
Oh, yeah.
for buying into real estate. So everybody is now into the real estate business. It used to be oil. Oil had all the great benefits, so everybody got into oil. Everybody had an interest in an oil well. Now it's real estate. Everybody's got into the Airbnb, the VRBO, or just buying and renting out or flipping houses. Everything's into real estate because there's huge tax write-offs up front and real estate. So, and the whole secret is rolling it like you buy a building, a $10 million building, you have it cost segged, where that means that you take out every aspect of that $10 million cost that can be accelerated in a deduction. So say of 10 million, 2 million can be written off even before you pay for it. Before you make the first payment, you can write $2 million off against your income. And so that writes off the income of the prior period. And you just keep rolling. You keep buying more property and you keep expanding, getting these big, huge tax write-offs. Now, you will have a day of reckoning, and there will be a day, this was only a temporary sunset rule. So after several years, you'll lose the benefit of the upfront cost. You still get the cost through depreciation, but it's that type thing I'm sure he used to get the benefit of paying minimal tax.
Well, yeah, a lot of companies. I know, like that's how Apple and Amazon, how they basically survive with the taxes. Is they just basically tell people, we reinvest it. All that money they made, they pay employees, they build.
Well, there's all different ways big businesses.
But
can
I can't imagine all the trucks with paper. Like, can you imagine being an IRS person? And it's like you get to work at 8 o'clock and you're like, oh man, can't wait to start the day. Well, here's your truckload.
Yeah.
Here's your stuff.
And you're not wrong. The way that audits used to be is they would physically bring in everybody's tax returns that were filed. And we're talking millions and millions of tax returns to the different districts or areas. They'd separate them by, here's 100,000 tax returns that were filed in your district. And those IRS auditors actually went into a physical room and one by one looked at those tax returns during their designated period of time there.
My word.
And then they would look at them and physically pull out and put aside those that they thought.
You imagine how many stamps they had? They're like, bad, good, bad,
that's
good.
right.
We need more ink.
Yeah.
And it's just,
And then they started codifying the tax returns based on the probability of getting refunds if they audited them. I mean, that's the whole secret. Now it's all automated.
oh yeah.
Now it's all mechanical. Now it's why they
Well,
want
that's why
everything
when you
e-file.
said that number, I was like, man, that's way before the internet. So that means when you were working for people to do their taxes, you read a lot and you wrote a lot. And I imagine, can you tell me when like the first, would they make typewriters specifically for those kind of documents?
We typed up the tax returns. My first tax return was Pete Knowles in Harris County. He was an attorney.
Lawyer, yeah.
And I did taxes in Houston for an attorney as a very young person. And it was really amazing. Then I went to work for a couple of CPAs and manually typed every return on a typewriter.
Because you look at those, I imagine the documents like for current tax stuff hasn't really changed that much, like the format,
Right.
like all the little boxes. And
Well, it used to be one page. The first tax returns I did were based on like 2 pages total tax. The total form was on 2 pages. And I remember going back and looking at the first, went to Washington, looked at the Treasury, going, I'm the one wanting to go see the revenue, wanted to go to the area where they did taxes.
I would go there. That sounds cool.
It was really interesting. And I think the first tax return was like, what I saw was like 1934 or something. And it had like 4 lines on it, total revenue, and I don't think there was maybe some minimal deduction, and then you pay tax at a fixed rate. And the one I saw is like the income was $3,600. $3,600
That's a lot of
total
money.
income, a lot of money back in '34, I would think. So anyway, it's really fascinating, and I wish to plot the tax rates, the tax income, and how much money needed to be collected and what they use the money for. Oh, for accountants, it's just heaven, but for the average person, it'd be boring.
What was the thing?
Well, there were certain elements I think that the way that taxes work is interesting. The way like businesses work. So if you're into like how does a business really work, I bet those same kind of people will find it interesting for how does taxes work, because you're trying to learn how to, not cheat the tax system, but work it.
But working the system, and that's what like Trump did. He worked the system. It was all legal in the
Right.
system.
Why are y'all talking about that? I mean, He's not going to jail for it. What are you talking about?
And no, nothing will happen to him. But I'm just talking about how
No, he'll go to jail.
he's not
Yeah, he
going to go
won't.
to jail.
He'll go to jail.
No, he's
he'll
not.
he'll get some traffic ticket he hasn't paid for, and they're like,
That
like
would-
this is 40 years old. I lost it in the mail.
Remember Al Capone? We got him on the taxes. But
Well, he was an idiot. He had 2 books.
he what?
He had 2 books,
Al
and they
Capone-
found
Al
found
Capone.
the other books. That's how they got him.
That's how they got him
Yeah, Al Capone was gotten
on tax.
on taxes.
Yeah,
Tax evasion.
Tax evasion.
When you can't do anything else, you can get somebody on tax evasion, I'm pretty sure. If you want to apply all the jot and tittle of the law, people just don't realize the law is very powerful, and compliance with it takes a whole battery of attorneys to.
except if you're Hunter Biden. Okay,
He still
so,
got in trouble for it.
any-
Like you're just.
but he's not going to
Did you
jail.
read Did you read his returns? Did you read them?
No. Shut up.
I bet your guest did.
Okay, so now you see what I'm talking about. She knows what she's talking about, unlike her sister. But I just love listening to you talk. I can't understand one word that comes out of your mouth, but I understand that you know what you're talking about.
Well, see, here's the deal. No one knows what they're talking about when you deal with the IRS and tax law. I challenge anybody in this whole United States to say that they have perfected and understand the tax law. It is so complicated.
It seems like it's very fluid. I mean, it changes.
Well, the reason it's complicated is because it's based so much on congressional, governmental, political
Who's in
issues.
charge at that
You know,
time?
a simple, like for example, this is a long time ago. It's totally different now, but medical doctors got to take their outfits off as a tax deduction, but the other medical people wearing the same outfits couldn't take theirs as a deduction. Now, why would you think that would be? Well, because doctors have a lot more clout and power in the making up of laws than the average person did.
Better
and that was a lot.
lobbyists,
I mean, that
yeah.
is just nothing. That's not even. It's a total mute point now. But back then, that type of thing was hard for people to understand. Well, can you take a uniform or can you not? Then they came up with all kinds of laws and regulations of when you could deduct a uniform that you wore for work and when you couldn't. That was a big issue. And so they just eliminated it all, took care of that problem. But it's,
And when was
very
that? When was that?
politically-
How long ago was that?
well, it's probably in the 60s.
In the 60s. Remember in the early 70s, they found that the congressmen were writing checks, and they weren't paying the money back. They were going in and taking money from the stash that they had. They'd write these checks, and they would never. They didn't have the money in the bank.
Oh.
And so they never got charged for anything. And so finally, but it just started building and building and building. And so they go, you know what? Somebody's going to find out about this. And they did. The press found out
You're
about
talking
it.
about the Billy Saul Estes stuff? Do you remember that?
Yes, but no, they were writing bad checks, and the congressmen were writing bad checks. And so
And the banks were covering them?
yeah, they were being covered, but finally they said no more, because it was ridiculous. They were taking such advantage of it, and so I started thinking, now why we can't do anything like that, but they think they can.
You just
They can
think
get
you're
away
going to
with it.
overdraft and they'll charge you $35, $50 now.
Yeah,
You just
And,
think
no.
about it.
Unless you're a private client of the bank.
Yes.
Did you know that?
Yes, you can. Your private, unless you've got millions or hundreds of thousands stashed away that they can draw on because they control all
Right.
that. They'll
They can
make
find
sure they
it.
get covered one way or the other.
But they like to leave these little snarky notes that this account needs to be this account needs to be investigated or something like that. Like
Oh yeah, and people need to be aware of any governmental entity that contacts, especially a business usually, over anything. I'm talking like sales tax, franchise tax, you name it, payroll tax. They're investigating. It's almost a different way of audit. It's the initiation of, they're going to look at all your records, even though they're targeting say a payroll, you'd think they just want to look at your payroll reports, but they look at everything. So in that, I'm convinced they are making recommendations to the IRS that this person's got a lot of potential of audit because they'll have a big refund if you audited them because of blah, blah, blah.
Right.
And I'll tell you another thing I'd warn the average person about, especially business people. You better be very careful about who and what you say anything about your taxes to. So, for instance, the kiss of death can be saying, you know, I'm taking a vacation, but I'm going to charge it all to a tax trip, and I'm going to get a big deduction for that, saying that, bragging about that, because any one of your employees that you dismiss that gets mad at you, they can turn in an anonymous report to the IRS, at which they can get paid a percentage of collection and tell them that you ought to investigate this client, they're taking blah, 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 and the IRS goes after them. And if you ever get in that scenario, you don't always know that the audit was triggered by an informant until you get deep into it. Very costly, big mess.
What's funny, I looked up like famous cases, and one of them is exactly what you just said, is this hotel operator, Leona Hemsley.
Oh, I know her.
And
You remember her?
she apparently told a housekeeper, we don't pay taxes, only the little people pay taxes. And that's what got her. Can you believe that?
Right.
Well,
I remember her. She was
She
a
was
trip.
convicted, and it was, I'm trying to see if there was actually a money, it was in 1989.
Yeah, Leona Hensley.
well,
Yeah.
I had an interesting, I mean, I go on and on about case law, but there was a guy that, in fact, started his CPA career with us as a staff accountant. And he was in the audit division, and he gets the job with one of our big clients. And it's a big family-owned oil business, and he becomes their CFO. Very charming, very cute, very personable, and supposedly in the know of all tax, financial and tax accounting. And he defrauded those people out of $90 million. And the way he was caught, this is what's so interesting, because employers have to be careful in their family businesses. They all want to go on trips and leave it in the hands of all these trusted employees. And he got caught because one of his many girlfriends went to the bookkeeper, who is a new bookkeeper and an older woman, and said she wanted the title to the car that he bought her, supposedly he bought for her while they were in this relationship, and he dumped her. So she wanted the title to that car, and the bookkeeper was like, what? And that started the investigation that led to disclosing that he had stolen this $90 million. And when he was interviewed, he said, it wasn't $90 million, it was more like $49 million. That was his big defense. And he got so confident and so blatant into it that he built this giant house that took up a block in Lubbock, and just very flagrant with the stolen money of his trusted employer.
That is great. Well, the whistleblower, I guess they didn't call them whistleblowers
Well,
at that
yeah, I
point,
guess.
but the whistleblower now is supposed to be protected, and they you come forward and we'll protect you, and don't worry about it.
And that is a lot of rise too. There's a lot of so sometime, because the audit I had that dealt with an employee turning in their employer, it wasn't made known what was causing the problem, because the IRS was not believing anything we gave them and anything we did. We went through the audit 3 full times over 15 tax returns, and they never would. And so she had to get an attorney, went to court, and just before we go to court, like in the next 2 days, they have discovery where you can go through all the records that the IRS had, that they were basing this audit on, and all the stuff we had. And I had told the client up front when we first got into it, I said, she'd prepared her own returns. I said, there are some things you did wrong in here, and I would put up a $32,000 bond, and it took us 6 years to get this settled. And when you put up a bond, it stops interest on that amount of money that it's settled. I said, but it looks like you're going to be charged at least $32,000 in tax errors you've made in the tax returns. And after 6 years and all this 3 audits and so forth, and whole end of the story, we discovered this notice that what initiated the audit, which was an employee turning her in saying that everything she did was fraudulent. And it ended up being settled before we went to court that day, and she had to pay $30,000 in tax, and they'd originally assessed about $800,000.
Wow.
And she ended up paying $30,000, and she already paid in $32,000, so they had to give her a refund after all of that, and they couldn't charge her interest or penalty on it. But she then turned around and sued, because she said, I know exactly who this is. It wasn't on any of the records, but she said, I know exactly who that employee is. And I'm sure that employee got dismissed because of whatever reason internally. And so she turned her in because she knew she didn't pay much tax, because she had an ongoing business, and it was a real interesting story, but they had a lot of documented business expenses, but it wasn't in the structure of regulations. That's where it gets really drawn out. If the IRS has this code of rules and regulations you're supposed to abide by, and you don't have those exactly in compliance, they can assess tax against you because you don't have the documentation to support your deductions.
Now, they can't arrest you. An IRS agent can't arrest you, or can they?
Well, who can
Yes.
who can arrest you?
What'd you say?
They could bring charges against you.
Yeah, you can have legal action.
Usually the
brought
local police, or depending on the size of the case.
I went to I may have told you this before. I was involved in a meeting where they weren't my clients. I hadn't done the return, but they came to me asking me to be there for a meeting they were having with a criminal investigating division, a criminal investigating agent of the IRS. And he comes into the meeting with these poor little taxpayers that just had very minimal. They were retired teachers. What could they possibly have this agent would be after? He comes in and sits down and says, I'm a criminal investigator with the IRS. I'm the type that if you lie to, I can send you to jail. Now, that's how he started that meeting with those poor people.
Oh, my goodness.
So it's just like they're really willing to sacrifice their firstborn to get out of there because it was so intimidating. And it is scary. I mean, and a lot of times you don't even know what the truth is. You try to tell them what you did and how it's interpreted. The classic is the auto log. No matter what you're audited on, they will always go to you're taking mileage. If you take my business miles, because that's probably the weakest item reported universally by people. They don't keep those auto logs according to the regulations. So the IRS can throw it out. It's at you're at their mercy of whether they will accept your adjusted concept of an auto log.
But that can be proved. Like Richard, do you have to put your mileage?
No, I don't. I stopped worrying about that.
You stop worrying about by not taking it, or
Yeah, because it was too much. Like, I had a book, and you had to it was too much. Because I worked with my CPA, and he's like, yeah, you can do this. I'm like, I started doing it for 3 months. I was like, nope.
See, you have to be disciplined and structured.
Because you always forget.
Yeah.
And you don't want to look like you just wrote it all in one day.
Same ink,
Right,
same
right.
pen.
Well, see, that's what's interesting about what I'm talking about. That's the rules. The letter of the law is direct compliance. And I think one time we talked about this on the air I've seen IRS throw out detail compliance, exactly what you're supposed to have, and throw it out. And it's like, what's your reasoning? Well, they could have just made that up. Well, of course, it all could. I mean, your setup could make it up. Third-party documentation, especially independent third-party documentation for any deduction, is probably your strongest assurance of it being accepted by the IRS.
If your boss could sign off on the fact
Right.
that
Well, that's why
the
you're
mileage from.
Well, see, all that's been eliminated if you're a W-2 wage earner now. If you're a W-2 wage earner, you've got to have a reimbursement policy set up plan with your employer, and you turn in the mileage to them monthly or weekly, and they reimburse you. And that way it's not taxable income to you. It's not reportable. You don't have to show it anywhere. and they get the deduction on their business in their business. You know, if you're working for a company, then that company gets the deduction. So that's the way the IRS has kind of streamlined that. That started in 2018. They changed that policy, where before, if the company didn't reimburse you for mileage and you used your car for business and it was ordinary and necessary, then you got to take it on your tax return. If you itemize your deductions and you file the 2106, early in the 60s, you know.
You even know the number, the 2106. You need to get out 2106. What are you talking about?
And see, like, salesmen are the worst. They got hit the worst. They used to call an outside salesman, meaning they were an independent salesman. They got a 1099 and they had to pay all their own expenses. Well, they got to deduct those expenses before tax calculations, discounting itemized deductions. I don't know why I'm saying all this to y'all. Y'all are looking at me like, what?
No, it's,
I just love to listen.
well,
to
you
talk
read
about
more
it.
like these cases are really interesting because to go back on
fascinating.
to go back on Al Capone, apparently what they did to him was they found both sets of books, right, and the illegal books and his legal books, and basically due to the removal of the word lawful from the 16th Amendment, they basically said, hey, if you're gonna use these books, you either gonna have to admit that you did all this illegal activity, or you cheated your taxes. So if he goes, I'm not paying taxes, but you're agreeing that you did all this illegal stuff, so they'll get you for all this illegal stuff,
Yeah.
or you want to go to jail for tax evasion.
Yeah, that's a trap.
And
yeah.
they got him. And
Yeah, that's right.
and a lot of what it looks like what a lot of rich people do is they try to offset their income by creating businesses, like fake businesses and things, and like that's where that money went. So you
Yeah.
can't tax my income because I built. They were saying this guy in 2006, Walter Anderson, he hid $365 million, and when they found out, they only made him pay $200 million based off a typographical error from the IRS. So he didn't have to pay. It was
great.
because someone messed it up.
Okay, listen to this, Richard. You're gonna love this. Her son.
Oh, he's in jail?
Do not say his name.
Oh, I'm sorry. An associate of hers
Yeah.
got a check.
Oh, yeah, I remember she told the story.
Yeah,
Yeah, about
I know.
$3 million.
Yeah.
And but a lot of people hadn't heard this story. I mean, we have
Okay, well,
new listeners every day, but it was so strange. I mean, I can't imagine a $4 million.
Got a check for $3 million from the IRS. And, he called me like, what do I do with it? I said, nothing. You have to hold it. You can't even afford to send it back. You can't even afford to go to the IRS office and have them return it because they will not give you a receipt for it. And you don't know who's going to cash that check. Because if that check gets cashed, they're never going to believe you didn't cash it.
Yeah.
So you got to hold that check until you can have some instruction of what to do. And even at that, it's better to just bury the check or burn it or something, because as long as it's out, you got a problem. And usually checks from the IRS are only good for 12 months. So you have to get them reinstated. But what they had done, he was due a refund, and it was maybe like $3,000, but they put too many zeros in it and made it $3 million. And I cannot tell you, it took me a year to just try to get the IRS to take it off of his record, because if you're not assured that that's taken off of your transcript, that they sent you a $3 million check, and sometime later they come back and find out, well, that was an error, and they ask you for that $3 million back with interest if you had deposited it.
But now, why would you have to give it back?
Why would you have to
If
give it back?
they sent it through the mail, it's been delivered to you.
Well, I'm sure that if you could, I guess. I mean, it depends on how dangerous you want to live, but it wouldn't be the right thing to do.
Well, now that they're all packing, armed, they're all armed.
Well,
maybe
I would
not.
never advise anybody to keep the money personally. I never advise them that amount to deposit it, because the minute you deposit it, you start paying interest back to them when you're contacted eventually saying that they made a mistake. So you got to be very careful, and you can get in a real bind where it's hard to know what the answer is.
Well, how long did it take before Chuck, your son called you. What before he called
He
you?
called me immediately. He didn't know what to do with the money. He didn't want to get in trouble with it, and he knew it wasn't. He
right.
wouldn't do that. It's like he said, I hadn't even made $3 million in my lifetime, so that was.
But imagine, I
obvious.
mean, Chuck is smart enough, and he has his mom's a CPA, but if that was sent to Ethel, Smith, and she lives in a very poor side of town, and she's very poor, and she gets a check from the IRS, and she doesn't know anybody named Iris, so she goes, what am I doing? Who paid me this? And they didn't know. I mean, innocently, they didn't know.
It is a really big problem if something like that happens, because if they didn't have a representative or they didn't know what to do, they would either obviously think they could deposit $3 million and they have a windfall and go on.
Would the bank report it to the IRS that they?
If they deposited a $3 million check, I don't think the IRS would be. I mean, I don't think the banks is required to report a deposit like that, because it's from the IRS to that person.
Right.
It's the transactions that are done in cash is my understanding that the bank's required to report. But
well, now the banks, they're only going to cover $250,000 at a shot. So if you gave them $3 million, only $250,000 of that, it seems like, is what they cover.
So I have never had to deal with that. The only time I have had people get checks that they weren't due, but they weren't $3 million. But I always tell them they usually should get some information back from the IRS, some written information explaining where it came from and what the deal was. And if they don't get that, then they should contact the IRS and get their transcripts, their personal transcripts. And the transcripts give detail of everything the IRS has posted to your Social Security number. All W-2, all income, all expenses.
Yeah.
So you can always go back there and look to see, and you can also see what the IRS has done, how they've assessed tax, if they agree with the numbers, if they've posted all your withholding and your estimate payments in the right year. I mean, on. And you can, a lot of times, it gives you some assurance that the IRS is showing on their records you have no tax liability open. So, because if you let that go, all they got to do is go and attach it to any property in your Social Security number, name, or associate.
Oh, man.
And then that tax is paid before you can sell that property, release the complete sale of that property. And if you wait until, you think, well, the IRS didn't sending me any more messages, why? I guess they finally figured out I didn't owe it, or they forgot about me.
Well,
Never rely on that.
Whenever Kevin Brady came up with the postcard return, the tax that was going to be your tax return was not a tax return, but for you to file, you filed. It was like a postcard size, and everything that you needed from it could be put on that postcard. Did you ever find out about that, or did?
Well, there are some postcard filings available, but they're usually like what they call 990s. They're nonprofit entities and organizations. You can do easy if you meet certain criterion.
Yeah, that's
But
what we
anytime you
did
have
when
a
we
lot of
first
detail-
started.
That's what you did?
When our first year, because
Yeah.
it was during COVID, and so clearly we weren't doing anything.
Right,
And
yeah, it's
we
based
it was a
on.
postcard. It was
Yeah.
really easy. It was
Yeah.
a little too easy. You're like, I didn't believe it.
Well,
Well,
that's what
you can do it online, but see, they don't. 990s usually don't owe taxes. They can owe taxes. They can have an excise tax if they have earnings that are not from volunteer contributions or whatever their entity allows. But if you have earnings off of those monies, like
Yeah.
passive activity, then you could have a 2 to 4% excise tax that has to be paid on those earnings. But that's nothing compared to 40%.
Yeah, because I think what we have with the station is, since we can provide a service that, like, for example, if we want to do like an audiobook, well, that's outside of the scope of the mission of our 501c3. But we can still perform it and charge people, we charge sales tax on it.
Oh, and
But
then you
also,
pay-
we can only exceed a certain amount of money of our total income, or donate. It has to be a certain percentage. Like I can't just make a lot of money doing voiceover work and make
Right.
no donations. I have to make more, like 80% more.
There's a lot of issues of what you've said on one scale, and this is the big thing
Yeah.
that got that Butler audit I was telling you about and Hennessy audit. Those two were big audits that dealt with that very issue with college, Texas Tech to be, one of the big state colleges, and it's where they can't make money. They have all kinds of rules and regulations for them to be an exempt entity. They can't create and make money that competes with the commerce, with the public.
Yeah.
So because they have all these tax exempt things, they're
Right.
not paying property tax, and they've got all these
Right.
buildings. They got all this stuff. So there's a big issue over.
Oh, yeah.
deals with trust laws. It deals with.
We can't have competitive prices.
Yeah, you
Our
have
prices are known
of-
a lot lower just because we're a 501c3.
Yeah, and so because of that, they have to create to protect themselves, to protect that 501c3 position, so that people can still give to it and get a contribution deduction. Because once that 501c3 is terminated, then all those contributions that people have made now becomes invalid, and that becomes a real problem. So they create separate corporate entities to do some of these things you're talking about. They run those, and then they pay taxes, a regular taxable entity that they have income and pay tax on. And
That would
sales
be our
tax.
move if we were making a lot, because that's not our primary business. It's to do
Right.
voiceover work. That's not our primary
No.
thing.
Yeah, you
So if
can't
it,
commingle those. Like
Yeah.
a church has to be very careful. They don't do anything that is not total volunteer contributions, spreading the gospel, doing everything relating to that. Once they taint that can all be thrown out.
because like churches can't
PTO.
rent their places.
Yeah, they
and-
have to be very careful.
Yeah.
Property tax, you want to get into
Yeah.
a big mess, you mess
We
up
went
and do property
through
tax.
all this stuff. I talked to this lawyer for like 7 hours, and I was interested. I wanted to know what I can
Right.
do and not do, because I didn't want to be that person who gets the IRS to call me.
Mm-hmm.
And it was interesting because it got my brain thinking, like, I can see so many people trying to cheat just through this conversation with the CPA lawyer guy, and I was like, this is amazing. Like, no wonder people are cheating the system.
Well,
'cause-
the reason you don't see a lot of issues on it is because the IRS was so limited in what they could audit. They, at one time, I had understood they only had just a very skeleton crew that could audit nonprofit organizations, because most of them couldn't get anywhere. There wasn't anything there. But the only ones they would audit were those that people complained in the audit, complained about the church. Say, for instance, they said they were given to a church and the minister's living in a mansion and the poor are going hungry, that type thing. And they turn them
you haven't
in.
seen my
and-
mansion yet?
and then they investigate them, and if they
Yeah.
find, like the PTO and the Baker,
Yeah, the PTO.
that same thing. And I could go on and on about that, because
Praise
they
the
tried to
Lord,
use
yes.
the case law. They tried to use the housing allowance of a minister to justify non-tax of their multi-million-dollar mansion.
Oh.
And so those type things, even though you may be using the letter of the law, you're missing the intent of the law, and the IRS can get you on that just as easily as anything else. So
And they told Tammy Faye, you can't use that
eyelashes.
her eyelashes are so bad. She used so much mascara, and probably trying to take that off as a tax deduction because she used it on the air. And
Well-
that's always the thing, like the clothes that you wear.
See, art. That's always a big issue with the art area. Anything that can be considered common, everyday use is not supposed to be a tax deduction. And so people get into this. Well, I wouldn't wear a suit and tie unless I had to for my business. So I should be able to take the suit and ties, and I shouldn't have to go to I wouldn't go to the beauty shop every week and have my hair
Right,
taken care
right.
of, blah, blah, blah. In fact, I was just recently in a meeting with a IRS investigative agent, talking to these taxpayers about that very issue, saying there was a tax preparer. They weren't a CPA, they were a tax preparer there in our area that was preparing tax returns. And get this, his biggest majority of people were policemen. And he's telling these policemen and all his clients that they could go into the beauty shop or getting their hair done or, all their clothes and on, because they had to be well groomed for, it was ordinary necessary business expenses, which is a battle that was fought 20 years ago, and they came up with this very restrictive.
Wasn't it dry cleaning?
Deductions, huh?
Wasn't it dry cleaning? Is
Yeah,
what really
dry
got it?
cleaning
Is
if
what
you
really
can-
got them? Because they're spending a lot of money on dry cleaning.
Right. Well, if you have a uniform and you have it dry cleaned, the dry cleaning, the uniform, and the whole cost was, like a policeman's uniform, was a deduction. But see, that's what I was telling you about. The 2018 law changed it to where none of that can be taken as a personal deduction. You got to get that reimbursed by your employer, because you no longer have the ability to take
Yes.
as an itemized deduction any employee-related expense.
Because I remember that happening because I have family members who are officers. And I remember that was a big deal because they were like, yeah, we spend like $12,000 on dry cleaning. It's like a crazy amount. And I was like, that means you're going to the dry cleaning like every day. He's like, yeah, because they want us to look good when we're doing X, Y, Z. So I had like 4 uniforms. And
Well, and like you used to be able to take, it got to be safety and protective clothing besides uniforms. So they got down to it had to be a steel-toed shoe, and working gloves and those types of things. And there was always a big hassle over all of that, what type of work qualified. And like I say, they just took care of that problem by totally eliminating it now. If you're not, you has to be a reimbursement account. When I say that, what that means is that the employee turns in the receipts to the employer, and the employer reimburses them based on those receipts, not on allowance, not on what I think it's going to be, not on what would be a good available amount, but you actually are being audited by your employer, and so the employer then validates, because no employer is going to pay you for what is not a valid claim. Suppose is the technical aspect of it.
But they would know better than, they would know better than the IRS. Because they're closer
exactly.
to the thing. Yeah,
Well,
I would think
and
that would be
what's
a
ordinary
good idea.
necessary. And the employer's not going to pay you 62 cents a mile on 10,000 miles if
Yeah.
you can't demonstrate that you had to use your car to take care of business for them.
Right.
So it's an ingenious way for the IRS to force. What it does is it forces all the expenses and reporting in detail back up to the big companies,
Right,
where there are
right.
fewer of those to audit as opposed to
That
every
makes
little
sense.
well,
independent.
isn't that kind of
That's
why they look like? Because I want to say for the business stuff, because I know they had like gas cards. So if you're traveling for work, that's why they just go, hey, we'll just buy you a truck instead of you taking your personal vehicle. We'll just pay for the truck, pay for the gas.
Right.
And that was easier than
Keeping track of the
keeping
mileage.
track of
That's
the
right.
mileage.
And that's a way to do. There's a way to do that. But it's
Sam
gotta be
just
compliant.
texted me and said, turn up Carolyn's mic.
I am. I'm trying.
Oh,
That's what I was saying.
She sounds good, and then she gets really into it.
Yeah, that's what I saw. I thought she's turning
Sorry,
her face
Sam.
away. I'm sorry. Okay, Sam.
And
Thank you.
and I know that's where they now go. Like I know there's a lot of linemen. That's how they handle their clothes. Is they basically provide all the clothes, and then if they want a specific boot, it has to be bought from a specific place that has the qualifications, and then they give you a voucher or something like that.
right. Well, in theatrical wear, for example, that should be an expense of the production. The theatrical clothes and all of that. So
True.
only
yeah, it's like the
those type-
movie. If
right.
a movie hired you for the actor to be
Right.
the actor, then they should be paying for your
So-
expenses.
So
yes.
there's where you have a lot of conflict with the IRS is anything that can be considered a tax deduction and that is also very personal, can be used personally. like an office in the home, like using your auto miles, your car for business purposes. Those type things, because they're both personal and business, or they overlap. And one of the things when you said, if a company furnishes a car for an employee, there's all kinds of laws that are available there. But if you work for a company and you use your car a lot for the company really should furnish you a car and charge you for personal use. And that's the way they came up with the law to try to satisfy that was really very well done, in the sense that they came up with a fixed amount and said, and I haven't looked at up this number lately, but I think it was like started out at $730 a year, and then I think it went to like $1,050. But they add that to your W-2 for the personal use of their business vehicle, but it's only for your de minimis use. And like, okay, what's de minimis use? Well, the example was like if you go by the store on your way home from work, or you pick up something, or you come in the you could even take the car home, and that was that personal use of having that convenience of taking it home, because you can't take mileage from your home to your office or to your work, but you can take it from once you go to your business, first place of business, then you can use your miles after that.
Oh, man.
It's crazy.
It is
I
very
messed up.
meticulous.
I messed up totally with Warner because I never did it. I took the van home.
Do you want me to
and
tell
had
them
the
about
big
your
no,
audit?
Don't.
Do
No.
y'all want to hear about
No.
Cindy's audit?
No, we got to go. He's giving me the wrap up.
Three times I went before the IRS to take care of Cindy's audit, and let me tell you what she gave me for proof. Shall I go on?
What did I
Can
give
I
him?
guess? I know we have to go, but my guess is literally a shoebox of receipts.
No. For the auto mileage accounting, I got a Raggedy Ann calendar with her notes of everything about Cindy and all how great she is. And I think even being on the Johnny Carson show is even inserted there somewhere. So to give her credibility that what she said and what she did was worthwhile. That's what I had to face.
Yes.
In fact, I even had to go on a day. It totally snowed.
But you can handle that. That's what's great. You can handle that. I've got to say goodbye here. I hate to do it. Thank you so much, Carolyn. You've been great. And listen, I want to say all of you first responders, we admire you, we love you, and thank you for listening. Y'all have a good weekend.
Every week, people ask the same two questions. Are they ready to retire? Will their savings last for their lifetimes? Hi, this is Chris Wootton with Wootton Financial Group. Our firm has been in Montgomery County for decades, but the hopes and dreams of the people we serve never change. We help answer these two questions and many more that people have about their uncertain financial future. We have a simple introductory client experience that allows us to get to know the client and includes a few meetings for the client to kick the tires at no charge. We provide a concise, one-page summary that helps the client get a better handle on which questions are the right questions for them. To learn more about Wootton Financial Group's process in helping their clients to a clearer financial future and to see their contact information, visit Cindy Cochran's show page on irlonestar.com/TCCS. Wootton Financial Group is a proud sponsor of the Cindy Cochran Show. Wootton Financial Group is available by phone at 936-449-5952 or visit them on the web at www.woottonfinancial.com. That's www.woottonfinancial.com.
This program is sponsored by the Wootton Financial Group. It is not the intent of Wootton Financial Group to render or offer personalized investment advice or financial planning advice through this radio program or any related website. Wootton Financial Group's participation in this program is limited to providing general information on financial matters and should not be construed as financial recommendation or investment advice. Investment advisory services are offered through Game Plan Advisors, Inc., a registered investment advisor registered with the Securities and Exchange Commission and the state of Texas. Insurance services are offered through Wootton Financial Group, Inc. Game Plan Advisors and Wootton Financial Group, Inc. are affiliated through common ownership, and neither firm is affiliated with The Cindy Cochran Show. No listener should assume that any information presented and or made available on this program serves as the receipt of or a substitute for personalized individual advice from Game Plan Advisors, Wootton Financial Group, or any of their representatives.
God's Garage is a 501c3 that repairs and gives away cars for free to single moms, widows, and wives of deployed military. You can help God